Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.
Welcome everybody on our social media channels on Facebook, LinkedIn, YouTube, Instagram. Hi guys, everybody who's watching, everybody who's listening on Berg Studio. I really look forward to sharing our message with you today and our topic with you today. It is 10 o'clock on a Thursday morning. Let me just move this, then you guys can actually see a way to WhatsApp me. So as you'll see on the screen, there is my WhatsApp number. If you want to communicate with me, chat with me, you can WhatsApp me on that number, 082-801-6693. You are welcome to chat with me on Facebook as well as LinkedIn if you want to comment. And then you can also give me a shout out if you are listening on Berg Studio this morning. You can give me a shout out there as well. And I will be able to answer your questions. So what are we going to talk about today? This is going to be an interesting topic. I look forward to discussing it. We're talking about crypto arbitrage. What is crypto arbitrage? Have you ever heard about it? And how can you use crypto arbitrage to get over 50% return on your investment, almost zero risk? So is that possible? And that's what we're going to discuss today. So you guys are welcome to comment, chat with me, discuss with me. And one of the things I get a lot when I do chat with people about crypto arbitrage is, no, it's too good to be true. It must be a scam. How do we know it's not a scam? Everything, all of those kind of topics. And what I'm going to share with you guys today is why it is not, how it works, and then also while we are playing music on Berg Studio as per usual, the guys on our social media, unfortunately we can't share the music with you. So you guys, I have decided to put a video on about a video I did about 2 years ago on how to spot a financial scam. So if you want to find out is something a financial scam or not, you are welcome to listen to that video, watch that video, and then also ask those questions. In the video, I do discuss questions you ask to find out if something is a financial scam or not. So yeah, use those questions, judge crypto arbitrage on that, and then we can and then you can see if it is something that you would be interested or not. Okay, so our music for today. Today I decided to choose a band from the 80s, a band that I had or listened to when I was a teenager. So yeah, it brought back some memories. I don't know if you guys still remember this band, but the band is called Indecent Obsession. I hope you remember them. And let's start with their most well-known song that they released in the 80s, and that song is called Kiss Me. Okay guys, those of you who are on our social media platforms, let us get you guys to watch the video on how to spot a financial scam.
Okay, we will be starting in about a minute, then I'll get going. Okay, guys, on my watch it says 6 o'clock, so time for us to get going. Thank you for joining me. I really appreciate your time, and I hope what we talk about tonight will be beneficial and you'll learn some things, and it will help you and save you money and save you from not stepping into a pothole and losing money in the future. So the topic for tonight is to talk about financial scams. And firstly, what is a financial scam? What kind of scams are out there? And then how to spot them and how to make sure, because a lot of them are very disguised behind business opportunities and investment opportunities and these kind of things. So we need to be diligent and we need to make sure that we actually understand these things so that we don't lose our hard-earned cash. So in these times that we are in, a lot of people are desperate. A lot of people are taking strain financially. Cash flow is limited. Income streams have dried up. People have lost their jobs. They've been retrenched. And that desperation always creates a lot of scams. People and opportunity seekers, they find a way to get people to give them their hard-earned cash. So in this time, as ever, but in this time specifically, we do need to make sure that we are diligent and we make sure that we are educated. The one thing I'm not going to talk about tonight, if you guys are interested in getting more information regarding that, and we can have a discussion about those kind of things, is phishing scams, email scams, all of those kind of things. I do think that, and I hope that most of us are not that gullible that if we find an email that says we've inherited $10 million from some Saudi sheikh and we have to pay 4,000 Rand to get the money. I hope most of us aren't gullible enough to fall for those kind of things. So I'm not going to talk a lot about that. Those are quite easy to spot, that it's some Nigerian sitting behind a computer somewhere sending out these emails and hoping people fall for it, and the desperation gets them to pay money to get money. So what we are going to focus on tonight is 4 different areas of financial scams or financial opportunities, and just look at the merits of each. The first one is going to be stokvels and investment clubs. I think all of us have heard about stokvels. They say there's about 800,000 registered stokvels in South Africa. We're going to talk a little bit about network marketing and multi-level marketing opportunities, or MLM opportunities. I'm going to talk about pyramid schemes and then Ponzi schemes. And if you look at network marketing, a lot of network marketing businesses are being looked at as if they are pyramid schemes, and Ponzi schemes. So we need to understand what the differences are so we can spot those pyramid and Ponzi schemes that are hidden within network marketing companies. So the first one we need to talk about is stokvels and investment clubs. So the first thing we need to understand is that a stokvel is actually a legitimate legal system in South Africa. So you can start a stokvel, you can become involved in a stokvel, and it's completely legal. There's no issue with that in South Africa. How a stokvel works is a couple of people gets together, let's say it's 12 people, and every month each of them contributes a specific amount, equal amount into the stokvel. So let's say, for example, to make it simple, every person pays 1,000 Rand a month into the stokvel. There's 12 people. So every 12th month, you will receive whatever's in that pot, that 12,000 Rand. So if everybody contributes 1,000 Rand, there's 12,000 Rand every month that comes in. And once every 12 months or once a year, you will receive the 12,000 from the other people.
It is always amazing when you pause a video that it always pauses at the worst, most inopportune place. So I just watched my face when I paused on the social media channel, and it's the worst picture ever. Anyway, welcome back everyone. Those of you who are listening on Berg Studio, that was Kiss Me from Indecent Obsession, our band for the day, and I'll be playing some of their other songs as the morning progresses. Those of you who are following me on social media, we will be playing while I'm doing the music, because again, unfortunately, I can't play you some music, but while I'm playing the music, there will be a video on how to spot a financial scam, which is something I think is very important for people to understand and be equipped with, to make sure that they don't make mistakes when investing their hard-earned money. So let's start our talk about crypto arbitrage. What is crypto arbitrage? How does it work? And how can you make over 50% return on your investment with almost zero risk, or almost risk-free? So let's get started with the crypto arbitrage presentation. And the first thing we need to understand when we look at crypto arbitrage is that there is two concepts to understand when we look at the whole crypto arbitrage opportunity. Now, just to give you a little bit of background, I've been in the financial services industry, as you guys know, since 1999. So it's been 23 years that I've been in the financial services industry. And a couple of months ago, about 6 months ago or so, I got approached by the guys from Future Forex that does crypto arbitrage. And as normal, I am quite a skeptical guy. So I was like, okay, because I get contacted with guys looking for investments, looking for us to suggest the investments to our clients and our investors all the time, and you always sort of roll your eyes. And when I was told that you could make amazing returns with zero risk, of course I was like, oh, maybe it's too good to be true. I then sat with Andrew from Future Forex, and he started explaining to me how the whole Future Forex concept works, and how crypto arbitrage works. And it immediately resonated with me because it made complete sense. Seeing that over the last few years, I have been playing with ideas of arbitrage in my head as well. So when he started explaining it to me, it made 100% sense to me. And as I started doing due diligence, got deeper and deeper into it, I just became more and more convinced that this is something that everybody should have a portion of their money in. And this is one of the big things that you need to understand. Crypto arbitrage is not about taking all of your savings you have, cashing in your pension fund when you retire, or your provident fund, or you leave your company, take all your savings and chuck it into this, because this is a get rich quick scheme. This is not how it works. And as I go through the discussion this morning, you will see that that is not how it works. But it is an ideal place to park a little bit of your money, 100, 200, 300,000 Rand that you have saved, that you could get amazing returns with zero or no risk. So let's have a look. So the first thing we need to look at is the two concepts that you need to understand how the crypto arbitrage works. The first one is you need to understand what arbitrage is, and I'm going to discuss that portion. And the second part you need to understand is what is your foreign investment allowance. Because once you understand the foreign investment allowance, you will understand how we are using, or how Future Forex is using your foreign investment allowance to create returns on your investment, high returns on your investment. So the first thing is, let's have a look at what is arbitrage. So this is the definition of arbitrage. It's the simultaneous buying and selling of securities, currencies, or commodities in different markets in order to take advantage of different prices for the same asset. That is quite a word salad. I'm going to go through it again quickly. It's the simultaneous, so it happens immediately. Buying and selling of securities, currencies, or commodities. So it is a simultaneous process that happens where you buy something and you sell it immediately. And you do it in two different markets in order to take advantage of the differing prices for the same asset. So what I want you to understand when it comes to arbitrage is it doesn't matter what the actual security, currency, or commodity is valued at. The value of that commodity doesn't matter. It is the different prices in the different markets that matter. The bigger the discrepancy between the price in the different market, the higher your profit or your return that you make on your investment. So whether that currency or Forex, let me just mute this phone of mine so that I don't get WhatsApps coming through the whole time. And just again, if you want to WhatsApp me, my number is 082-801-6693. You are welcome to WhatsApp me. So it is about the differing prices in different markets. So it's not about the volatility of the commodity, the currency, or the security, or what you actually buy that security, currency, or commodity for. It is all about it's costing something in one market against what it costs in another market. So let me give you a good example of that. So if you look at a McDonald's Big Mac meal, if you go to McDonald's, you would pay approximately, in South Africa, you would pay approximately 100 Rand for that Big Mac meal. I don't know exactly how much it is, so don't keep me accountable if I'm 10 Rand out or 5 Rand out, please. But you buy it in South Africa for 100 Rand. But if you go and check and you go to New York and you walk into a McDonald's and you want to buy a Big Mac meal at that McDonald's, it will cost you approximately $10 for that Big Mac meal, which means $10 converted into rands is equal to approximately 160 Rand. So if you could buy a McDonald's Big Mac meal in South Africa and instantaneously sell it in the US in dollars, you would make 60 Rand profit on that Big Mac burger, because you could buy it in our market for 100 Rand and sell it in the US market for 160 Rand and therefore make 60 Rand profit. Now, you can't do that because you can't instantaneously take a Big Mac burger from here and move it to the US. But this is the principle between arbitrage. Arbitrage is finding a product, finding a commodity, a security in one market, selling it 100 Rand, and then selling it at a different market where it sells for 160 Rand, and that difference in price is then the profit that you make. So that is arbitrage. Now let's look at the second part of it, and that is your foreign investment allowance. Now, a lot of people don't even know that they have a foreign investment allowance or what it is. So the foreign investment allowance is the amount every taxpayer in South Africa is allowed to move offshore annually. So you can take this money and physically transfer it offshore into an offshore account and invest it in a different country, whether that is to invest it in dollars, in pounds, in euros, it doesn't really matter. But you are allowed, or you have an allowance every year as a taxpayer to move money offshore and get access. Now, a lot of people look at the money that they invest through their financial services provider, their insurance company, their investment company, into their RA or into their endowment, and they say, but I have money offshore. I've got offshore exposure on my retirement annuity. Now, that is not moving your money physically offshore. The fact that you are invested in an offshore fund doesn't mean your money went offshore. It is called offshore exposure, and it is done through an asset swap. So your money actually never leaves South Africa. Your money always stays in rands. All that happens is you get the exposure to the offshore market. In this case, when we look at the foreign investment allowance, your money actually leaves South Africa, moves to a different country, and gets converted into another currency. And that is how you use your foreign investment allowance. Now, every taxpayer in South Africa qualify for 1 million offshore allowance annually without SARS approval. So you don't have to get SARS approval to move at least 1 million Rand offshore physically. So that's everybody that is a taxpayer gets that without SARS approval. But you still have another 10 million which you can move offshore with SARS approval. What that means is if you are compliant with SARS, you don't owe them any tax, all your tax returns are up to date, etc., they will approve. Oh yes, and you have to prove that you actually have the assets available, the liquid cash available to move offshore, and they will approve that money being moved into a different country. Okay, so that's 10 million plus the 1 million, which means you have a total of 11 million Rand of a foreign investment allowance per calendar year. And that's very important. It's per calendar year. It's not financial year, it's calendar year. So from now, if you haven't used your investment allowance yet, from now until the 31st of December 2022, you can move 11 million rand to a different country with SARS approval. Also, this is in a calendar year, it is not pro rata. So it's not if you are 6 months into the year, you only have 5.5 million left. You can go on the, if you have the approval, move on the 20th of December, you can move the whole 11 million to a different country, even though you haven't used your allowance for the rest, for the year so far. Also, it doesn't accumulate. So if you don't use your foreign investment allowance this year, you don't next year have 22 million. It's 11 million in a calendar year, and if you don't use it, you lose it. So what's important there is most people in South Africa, most taxpayers never use this foreign investment allowance. And what crypto arbitrage does is it helps you to use that allowance to generate wealth for yourself. Okay, so guys, when we come back, we're going to take a short music break. And when we come back, we're going to talk a little bit about what the ideal asset is for arbitrage, why that is an ideal asset, and discuss how it works exactly. So those of you who are listening on Berg Studio, we're going for another music break. We're going to listen to Whispers in the Dark from our band for the day, Indecent Obsession. And then those of you watching on our social media channels, we will be continuing with the video on how to spot a financial scam.
A big thing with that is, and to be sure that it's a stock file and it's above board, is that nobody gets paid for bringing in new members. So that's a big one. The moment you are paid to recruit new members into the stock file from the money that is gets put into the stock file, then there's some red flags you need to make sure and ask a few questions. The second one is investment clubs. So how an investment clubs works is a group of people get together. They then decide that they want to invest in a specific investment, whether it is an investment in a structured investment or anything like that. They contribute equally to this investment, and then they also share equally in the returns. Again, nobody's getting paid to recruit people into the scheme. So most of these stock files investment clubs are basically forced savings vehicles more than a money-making opportunity. With a stock file, you will never get more money out of the stock file than what you've put in, because if there's 12 people, you put 1,000 rand in every month, and you get every 12 months you get 12,000 rand. You would have put in 12,000 and gotten 12,000 out. In an investment club, you will get the money that you put in plus whatever return on investment there is. Okay, before we go into network marketing, guys, those of you who are listening, if you have questions, please ask those questions. I do have it open so I can see. Thanks, Yarpi, for reminding me. I can see the questions coming up. And if I don't have time during the talk to answer the questions, I will revert back and try and answer all the questions at the end. So please ask those questions. I am here, so you can use me to answer those questions for you. The second one is network marketing, or MLM. So this is something that a lot of us have been approached with. We hear a lot of network marketing opportunities that come on, and I've researched this quite a bit over the last 21 years. So network marketing is actually a legitimate business model. And what it does is it's a marketing or a business system that companies use, whereby they find independent distributors or salespeople to market their products directly to the public. These distributors are then encouraged to recruit their own salespeople also as distributors. And this creates a network of distributors on which you will earn overriders, incentives, and bonuses. So basically, you become an independent salesperson or independent distributor for that company, and you can then sell their products for a profit, and you can recruit other salespeople into your network. And the more salespeople you have, the more leverage you create, and you receive overrider on those sales of those distributors and salespeople. So it's a legitimate business model, like most sales organizations. People always look at the structure and they say, well, the structure is a pyramid because you've got one guy at the top, he recruits 3 or 4 salespeople who recruits 3 or 4 more, and it becomes a pyramid. But the fact that it's got the structure of a pyramid doesn't make it a pyramid scheme. If you look at any sales organization, a sales organization has that structure. If you've got a national sales manager with a regional manager, with the district managers, with the branch managers, with the salespeople, you'll see that structure all the time. So that's just the natural structure of any sales organization. So it doesn't necessarily make something a pyramid scheme if the structure looks like a pyramid. So a legitimate network marketing company is an opportunity for people to earn extra income or multiple sources of income. The problem is that this structure is very often used as a disguise for a pyramid or a Ponzi scheme. So most pyramid schemes and Ponzi schemes disguise themselves as network marketing companies. And that's where the problem comes in. How do you make sure that the one that you are looking at isn't a pyramid and a Ponzi scheme? And we'll get to that. I'll give you a few questions.
Welcome back, everyone. And that was, those of you listening on Berg Stereo, that was Whispers in the Dark from Indecent Obsession, our band for the day. Those of you on social media, we are watching how to spot a financial scam, and I hope you've already got a few tips from that. If we don't get, because it is quite a long video, we won't get through the whole video, you are welcome to go to our YouTube channel. You can just search for I Retire. And on our YouTube channel, you will find that video, and you can watch the whole video with all the tips, as well as the questions I give people to ask on when they get approached by some investment, to see if it is a scam or if it is a legitimate investment. Okay, guys, so let's continue with our discussion on what is crypto arbitrage, how does it work, and what are the returns, and how can you get these amazing returns for zero or very, very little risk. Okay, so the next discussion is, what is the ideal asset for arbitrage? Now, there's a lot of different kinds of assets that you can use for arbitrage. You could use Forex, you can use currency, you can use commodities like steel, gold, all of these kind of things. But the guys from Future Forex stumbled upon an ideal asset, and that is cryptocurrency. And I know those of you who know me and has listened to me quite a bit know what my opinion on cryptocurrency is, and that I am not a big fan of people investing in cryptocurrency. And for those of you who have invested in cryptocurrency, I feel your pain over the last couple of months. But when it comes to arbitrage, it's a completely different way of looking at cryptocurrency. It is investing through cryptocurrency, but not in cryptocurrency. So it is a different approach to it. And when it comes to this, this is the first investment I have ever come across where in cryptocurrency in any shape or form that has actually made sense to me. So buying crypto, so how does it work? So you buy crypto on an offshore exchange and then instantly sell it on the South African exchange. So that's basically what crypto arbitrage is. You buy cryptocurrency on an offshore exchange, usually the US exchange, and then you instantly sell that on the South African exchange. And why is that? Because crypto assets typically trade at a 2 to 3% premium in South Africa. So that means if you are in the US, it's like the McDonald's hamburger analogy. If you are in the US and you buy a Bitcoin, and you come to South Africa and you sell that Bitcoin, you will get 2 to 3% more for it in South Africa than you paid for it in the US. It is the difference in price on the US exchange against on the South African exchange. So you are not directly investing in the crypto asset or in Forex. So you're not holding on to dollars, and if the Rand dollar exchange rate changes, you lose or win some money. You're not directly investing in the crypto asset or investing in Forex. You're capitalizing on the inefficiencies that exist in the local market. The fact that it is more expensive to buy crypto on our South African exchange than it is to buy it in an offshore exchange. So it's the difference in price. It's got nothing to do whether cryptocurrency, the price has tanked, it's less or it's higher than it was yesterday. Okay, so how does it work? So there's a couple of steps that happen when you look at crypto arbitrage. The first step is your funds is converted to US dollars using your foreign investment allowance. So the money sits in a bank account in South Africa. It then gets moved to the US and converted into dollars, and that uses a part of your foreign investment allowance. Once it's converted into dollars, those dollars are used to buy cryptocurrency on an offshore exchange. So you buy Bitcoin or whatever cryptocurrency there is on an offshore exchange. Once that is done, it gets sold immediately on the South African exchange for a profit. And that's what's very important there is the word immediately. So you don't sit with that crypto asset, owning that crypto asset. It gets bought and sold immediately. Okay, so there's no time delay between the two where volatility in the crypto market can have an effect on what you earn from your buying and selling of the crypto asset. Your initial funds plus the profit that you made from the buying and the selling is then deposited back to your local bank account. Now, what I want you to see there is that for about 70% of the month, your money is basically sitting in a local bank account, your bank account in your name. It's not you give money to an investment company somewhere and they do something with that money and show you on paper what you have earned. You can actually literally see on your own bank statement what you have earned, and the money is physically in your bank account. It's not just a paper statement that you get and it shows, you've earned 20%. It actually shows in your bank account. So it's deposited back to your local bank account, and that cycle takes around 24 hours to happen. So from the conversion happening to the buying of the dollars, changing it or buying crypto, selling it immediately on the South African exchange, and then paying those funds back into your bank account takes around 24 hours. And every cycle uses a portion of that foreign investment allowance of yours. So let's say you have 200,000 Rand in your crypto wallet, not your crypto wallet, your bank account that you're going to use for the crypto arbitrage, and that 200,000 is then moved to dollars. It buys crypto, it gets sold in South Africa, comes back into your account. That has used 200,000 Rand of your 11 million. The next time you do that cycle, you have used 400,000, and the next time you've used 800,000. So every time you cycle that 200,000 Rand of yours through this 24-hour cycle, you use a portion of that foreign investment allowance. So what that means is that you only have a limited amount of cycles before you've used up your whole foreign investment allowance. So if you take 200,000, you will have about 55 cycles before you have used your foreign investment allowance, which means you are limited to how much money you can actually make through crypto arbitrage with that foreign investment allowance. Now, a lot of people will look at that as a negative. I see it as a positive, because what it proves is that it is not a get rich quick scheme. It is not an investment where you're going to go take all your savings, cash in your pension fund, and put everything you have into because you're going to get a 50% return. That's not how it works, because you are limited to that 11 million foreign exchange allowance. So if you put in 11 million rand, you can only do one cycle, and once that cycle is done, you've made your money, and that's it. So it is not for people where billionaires and millionaires will just put in millions and millions and millions of rands and make all this money because it's so easy. It's a get rich quick scheme. It is not. It is a portion. You take a small amount of your total savings and use this as part of your whole investment strategy to generate good returns, very, very high returns at a very low risk. Okay, so the next, when we come back, we're going to talk a little bit about our partners that we work with called Future Forex. How did they come about, who they are, and what makes them the top guys in the industry when it comes to crypto arbitrage. Again, let's go for a short music break. For those of you who are listening on Berg Studio, again, we are listening to Indecent Obsession, our band for the week. And then those of you on our social media channels, we are going to continue that video on how to spot a financial scam.
Later on that you can ask to make sure that you're making the right decision. So let's quickly look at a pyramid scheme. So how a pyramid scheme works is you typically join an opportunity for an initial fee, which is usually disguised as an administration fee, a training fee, something like that. And then you contribute monthly for an illegitimate or a fake product. So what do I mean with an illegitimate or a fake product? That is a product or a service that offers no or very little tangible benefit, or is much more expensive than the value it gives. So if I have this example, I remember years and years ago, there were a few students at Tuks University and University of Pretoria. And what they did is they got this ingenious idea to print certificates. So they basically went to a printer and they printed certificates, which cost them 5 Rand to print for each certificate. And then they started selling those certificates to people for 300 Rand per certificate. And those people could then buy certificates from them and sell them to other people again and earn overrider on those people. Now, that's a typical example of how a pyramid scheme works, because that certificate in and of itself has no value. There's no tangible benefit for the person to buy it, and the certificate itself is not worth 300 Rand. So if you look at a pyramid scheme, usually the product is where you can determine if this is a legitimate business or not. And we'll ask the questions. I'll show you the questions a little bit later. Okay, so you are then paid a percentage of the money paid by other members every month. So usually you pay every month for this product, and because it's not a legitimate product, you basically just pay money into the scheme or into the system. And then when you recruit other people, you will get a percentage of the money they contribute to the system. So usually there's no sale of the product that will take place to any person that is a non-member of the scheme, because the product has no or little value. So let's look at that certificate example again. If I come to you and say, please buy this certificate from me for 300 Rand, then you're going to say, are you insane? Why would I want a 300 Rand piece of paper? But if I tell you, listen, if you join this business, you have the opportunity to recruit other people who buy certificates from you for 300 Rand, and you will earn money from those sales. Then you would look at buying that certificate. So the reason you're buying into this is not because the certificate is valuable. It is because you actually want to have the opportunity to buy or to get other people involved. Therefore, 99% of the sales in these kind of schemes happen within the network. Very, very little people buy it from outside the network. The problem with this is more and more people will have to be recruited all the time to sustain the model, because every time you recruit people, they have to pay out more money and more money, which means more people have to be recruited to keep the model sustainable. And eventually this model collapses. And most people that has put money into that will never get their money back. Let's look at Ponzi schemes. So a Ponzi scheme is an investment scheme. So where a pyramid scheme is like a business opportunity, a Ponzi scheme is usually disguised as some kind of an investment. The last few years, has been quite a few of these Ponzi schemes masquerading as network marketing businesses. And there's been so many of them coming onto the market and people buying into those kind of things. So let's quickly have a look at Ponzi schemes. So what happens with a Ponzi scheme is you're usually required to invest in an investment vehicle or a business that will give you unbelievable returns on your investment. So typically you will put money into an investment, a pure Ponzi scheme. You will put a capital amount in.
Welcome back, everyone, and that was Indio from Indecent Obsession, our band for the day. And those of you on our social media, you were watching a little bit of our How to Spot a Financial Scam. Again, if you want to watch the rest of the video, as we're not going to get through most of it, you can go to our YouTube channel, just search I Retire, and you will get it on there. You can watch the rest of the video. Let's start talking about our partners. Our partners are Future Forex, and in my opinion, they are the top guys in the industry when it comes to crypto arbitrage. And there's a couple of reasons that I decided to partner with them and do our crypto arbitrage through them. And just a little bit of detail on Future Forex. The first one is they've been trading crypto arbitrage, or doing crypto arbitrage since 2017. The two founders started doing it for themselves. They saw the returns that they got, and then they did thousands of hours of work, due diligence, systems development to make it available to the public. Also, they made sure that they comply with all regulations that is or regulates the industry. Since 2017, they had 0% losses. So they have not once lost any money on crypto arbitrage. And it makes 100% sense that there are zero losses, because you look at the discrepancy between the price. Why would you do a trade if at that moment the price is less in South Africa than it is in the US? You just wouldn't trade. So if you look at it, you will never have any losses on a crypto arbitrage trade. They are fully compliant with all legislative requirements, and they've actually gone above and beyond to get audited and make sure that they do comply with all legislative requirements. They also are authorized financial services provider, and their FSP number is 51884. When you look at crypto in South Africa, it is not actually regulated by the Financial Services Board, but they went and they still registered themselves as a financial services provider, even though they are actually not required to, but to make sure that it builds credibility with clients and that they do have an authority to report to. They give you personalized service. So you get an admin manager and a relationship manager that works with you. So anything you do, you work with those two individuals. So it is not a call center where you phone and today you speak to one person, you have to go through your whole explanation, and tomorrow when you phone, you speak to a different person and he has no clue what the other person said. You actually have personalized service where you have a human being on the other side that you can work with. They work on profit share only, and this is quite important. So it's not like an investment firm that they get their management fee whether they earn you any money or not. Future Forex works on a purely profit share model. The more money they make for you, the more money they earn. So there's complete synergy between what your goals are and what Future Forex goals are. The only fees that get charged for a trade is the third-party fees to actually make the trade happen. So money needs to be converted into dollars. There is a fee that the banks charge to do that. Money needs to be transferred from the bank account. There is a fee. Those are all third-party fees. Those are not Future Forex fees. Future Forex purely works on a profit share model. Through working with Future Forex, you have zero Forex or crypto asset exposure. And that is because the trade happens instantly. There's no time where you are sitting with Forex or sitting with a crypto asset where the market can crash and you can lose money. That happens instantaneously. So the only time something can go wrong is if in that specific second that button is pushed, something catastrophic happens. But the chances of that happening in that specific moment is almost negligible. They show complete transparency. This was something that was very important to me. And when you look at the statements that Future Forex gives people, it gives every single cost, every single thing that happened on that trade is on your statement. And you get a statement for every cycle that happens. So you are always completely aware of what is happening, and you can go to your bank account and go see that the money is sitting in your bank account. So there is complete transparency. They offer a simplified setup. So a lot of people ask me, but can't I go and do this myself? Can't I do the crypto arbitrage myself? And the simple answer is yes, you can go do it yourself. But to do that, everything, all the admin, all the work, getting your SARS approvals, filling in those forms, getting to the right people, doing the currency exchanges, all of those things are a hang of a lot of work and knowledge that you need to get those systems right. Where through Future Forex, all of that is already set up. It's simplified. You just plug into their already working system, and through that you get access. You don't have to sit and watch the markets 24 hours to see when there's a discrepancy between the two prices on the two exchanges. Another thing that was important is the fact that Future Forex uses reputable banking partners. Their main banking partner is Mercantile Bank, which is a division of Capitec Bank. It's just the commercial side of the Capitec Bank brand. And Mercantile Bank is, you get a bank account with them, the same as what you would have gotten a bank account with an FNB, ABSA, a Nedbank. It is your account. The money sits in your account. The only time the money is not in your account is in the 24 hours while a trade is happening. And then the money comes back into your account. So you can literally walk into Mercantile Bank at any point and say, listen, I want a statement of my bank account, and they will give you a statement and you will see exactly what's going on in that account. The only thing that happens is you authorize Future Forex to trade with the money in your Mercantile Bank account. So they have the authority to move that money to do a trade and then deposit the money back into your account. So let's quickly look at a track record of crypto arbitrage over the last 18 months. This is up to July 2022. And how would it have compared if your money was invested over that 18 months in crypto arbitrage instead of having it in one of the other kind of investments? So if you had 200,000 Rand in a Bitcoin, you would have, at the end or the beginning of July 2022, if you put 200,000 Rand in, you would have 134,000 sitting in your crypto. So you would have lost about 65,000 Rand. Not very exciting. If you put money into the JSE, your 200,000 would have gone down to about, if I had to guess, about 175, 180,000. So you would have lost a little bit of money on the JSE over that 18 months as well. If you put it in a bank account that gives you 8% interest per annum, your money would have grown to 224,000. So if you look at that in the market over the last 18 months, it would have actually been better to just have your money in a bank account at 8%. Not that you're going to get 8% in your normal savings, but you could potentially on a fixed interest account have gotten more return. If you look at the S&P 500, it would have given you a small return, probably, if I look at that, probably about 210,000, so about a 10,000 return. If you look at the crypto arbitrage actual investment returns, taking into account that they assume one trade per week, you would have had 585,000 Rand by the end of July. And I know when you look at that, it almost seems like it cannot be. But again, I want to reiterate the fact that this is not an unlimited return. You are limited to the 11 million foreign investment allowance, which means that you can never get unlimited returns, although the returns on the money that you have in is very high. Okay, guys, let's quickly have a look at some projections on what happens, and if you actually put money in, what are the returns that you can expect from your future Forex investment. So there is a breakdown of some of the returns that you can expect to receive. Looking at these, the amounts that we're working on, we're assuming an investment amount of 200,000, a gross profit per trade, so that is the total premium that it gets sold for. So we're looking at 1.5%, which is quite conservative. And then we assume 2 trades per week. Now, they can trade up to 4 to 5 times a week. We assume 2 trades per week. There's a couple of things that affect the amount of times you can trade. The first one is to make sure, or Future Forex make sure that there is actually a market or a demand for the crypto that they buy. Otherwise, they won't trade. Secondly, it all depends on the differences in prices. Are there times when the prices aren't quite at 1.5%? And thirdly, is your foreign investment allowance approved? So if we are battling, or if they are battling to get SARS approval, it could delay your trade. But on those figures, and in this, we can say you can either reinvest your profit, or you don't reinvest your profit, you just take your profit every month. So if you put in 200,000, you would trade 400,000 for the week. Your profit for the week would be 2,893 Rand, and that would be your total profit for the year. The next week, another 200,000 will be traded. You will then get another 2,893. By the end of week 2, you would have gotten 5,786 Rand on your 200,000 Rand investment already. If you look at a 4-week period, your 200,000 investment will give you an income of about 11,500 Rand. Now, guys, if you look at investing that money into a fixed interest account, there is no way. A fixed interest account, you might get, if you are very lucky, let's say 10%, that gives you 20,000 per year. Divided by 12 months gives you about 1,500, 1,600 Rand a month. Here you are getting 11,500 Rand over a month period on these figures. But if you continue with that, you will reach your foreign investment allowance at around 27 to 28 weeks. So you'll only be able to trade for about half a year. Then you reach your foreign investment allowance and your investment will close. You cannot then trade for the rest of that calendar year. It still gives you a return of about 78 to 80,000 Rand on your 200,000 Rand investment. So that gives you an amount of, let's look at it per annum. So let's say about 80,000 Rand per annum. It's about 40, just over 40% return in that scenario. If you decide to reinvest your profit, you will see you will reach your investment allowance much quicker, about 23 to 24, and you will make a profit of about 77,000 Rand profit that you will make on that 200,000 investment. Looking at a trade of 2%, if they start trading at about 2%, you will again reach, let's say we do not reinvest, you will reach your foreign investment allowance limit at about 27 to 28 weeks, and you will make about 115 to 117 odd thousand Rand over the period. So if you look at 115,000, it gives you a return on investment of almost 60% on your money. So guys, there's some projections of what you can expect to get from your future Forex investment. Again, what I want to make very clear is that this is not a get rich quick scheme. It is not an unlimited return on investment. You can't just put all your money in there and hope to get the most amount out. What it will do is you have a limit of the total amount you will earn over a year, and you will just reach that limit at a specific period. The less you put in, the longer it will take to reach that amount. But it is not a get rich quick scheme. So guys, that is crypto arbitrage, and an opportunity to earn up to 50 to 60% return on your investment. If you need any more information, if you want to look at that calculator to show you what your returns are going to be, if you have questions, if you're not sure, you are welcome to contact us. You can contact us at info@retirehappy.co.za. You can phone our office on 0878090603. You can email me directly at lawrence@retirehappy.co.za, or on my WhatsApp number 0828016693. And we will be happy to discuss with you and show you how you can register and how you can get involved in crypto arbitrage. Guys, thank you very much for joining me today. I really enjoyed sharing this with you, and I'm very excited about this investment opportunity. Like I said, if you have any questions, you are welcome to get in contact with us. And then I will play out on Berg Studio. We're going to play out with our last song for the day for Indecent Obsession, called Hunger. Enjoy, and guys, see you again next week, same time, same place. Cheers. Okay, guys, those of you on our social media platforms, thank you for joining me. And I'm going to say goodbye. Again, if you want to watch the rest of that video on how to spot a financial scam, you are welcome to go to our YouTube channel. Just search for I Retire, or search how to spot a financial scam I Retire. You will get the video and you can continue watching it there. I would really suggest you do. The questions we teach there is invaluable moving forward when you're looking at investments. Cheers, everybody. I will be back next week, Thursday at 10 a.m. and I look forward to seeing you all again then. Cheers, everybody.